Right now, discovery of a vaccine is still in progress, and some investors are praying for a stock market rebound back to the highs, as hopes for economic stimulus around the world in several major nations are starting to take effect. If we're lucky, then a tsunami of free money might be auto-deposited into our bank accounts. Although we'll never know the exact timing of these policies and when developments actually start to happen, the stock market will continue to work based on hope and fear until things go back to normal. In this video, I'll be sharing 5 ideas in Canada that I think will thrive during the virus. If you're someone who is fearful of the stock market going down, check out my previous video. But before we start, smash the like button and subscribe to my channel. Let me know what you're investing in during these times. So there's one thing that we need in any environment, and that's garbage disposal. As long as people continue to consume and buy stuff, there will always be something to throw away. Here's an interesting fact. 58% of produce in Canada is thrown away despite still being edible, be it in households, restaurants, grocery stores, creating products, or during delivery. So in Canada, Waste Connections is our go-to idea. Meanwhile, GFL on the other hand, I find is too new and indebted. Waste Connections does garbage disposal and recycling throughout North America for residential, commercial, municipal, industrial, and oil and gas customers. Their revenues are generated on a long-term contractual basis and have annual pricing increases above rates of inflation, meaning they have good recurring cash flows with steady upside. A key element of growth for the company is through acquiring smaller mom-and-pop garbage disposal companies and making them more efficient through cost improvements and in resetting their undervalued customer contracts back to market prices. So the need for electricity in our lives is something certainly necessary for people, especially during these tough times. Otherwise, how can we turn on the lights or use the internet? For a world that's increasingly using more electricity every year due to technological advancements, rapid economic growth in developing countries, and electrification in transportation and heating, I think that owning the utilities that can generate electricity would be a pretty good idea. So why not invest in one that operates globally, is environmentally friendly, and knows how to use tactical strategies to escalate its investment returns? My next idea is Brookfield Renewable Energy. The company owns a portfolio of renewable power generating facilities in North America, Colombia, Brazil, Europe, India, and China, and they generate electricity primarily through hydro, wind, and solar. A great thing about any Brookfield company is their investing style. They are aggressive at buying undervalued renewable assets, then they make them much more efficient. They cash out of the investments in their portfolio that are overvalued, and then they use the funds to buy even more undervalued assets. It's pretty much the Brookfield capital recycling program. In a low interest rate environment, I'm sure Brookfield will be taking out their checkbook to buy more renewable assets during this time. So the pandemic has begun to test society's ability to work from home as well as to be able to shop from home. With physical shops out of play for a while, businesses will have to depend on their e-commerce channels. Shopify is one that I can think of that will benefit from these scenarios. For those that don't know, Shopify is a global e-commerce platform that offers businesses a range of online store services such as payments, marketing, shipping, and customer engagement tools. As for how Shopify benefits during this pandemic, first, their employees should find it pretty easy to work from home since they don't physically need to be at work all the time to do their jobs, and working from home should be second nature for them. Second, businesses in virtually every industry will probably be aggressive in trying to convert their physical sales to online sales while they're on shutdown. With this wave of business now forced to go online, Shopify can benefit from an influx of global sales volume going through their platform, from either the conversion of physical to online sales or new e-commerce stores that will be started up. Within the land of real estate, residential real estate might get pummeled if tenants can't pay rent after losing their jobs and landlords can't pay their mortgages. And within commercial real estate, it's already a scare if tenants are deemed non-essential businesses and are shut down. So the real estate I think that will have better performance during this time will be warehouses and distribution centers, as well as real estate for essential businesses. So this is a two-pronged idea. For warehouses and distribution centers in Canada, my go-to would be Granite REIT, and for essential businesses, I would go for Choice Properties REIT. Choice Properties REIT is Canada's largest real estate stock and mainly owns Canadian retail properties anchored by its major tenant, Loblaws. Note that Loblaws is also a 62% owner of the stock, so you can ensure that rent payments will be made to themselves on time. Besides all the different Loblaws brands and Shoppers Drug Mart, it also has other tenants classified as essential businesses like Dollarama, Sobeys, LCBO, and the Canadian banks. Outside of retail, it also owns a portfolio of industrial real estate that are mostly warehouses or distribution centers. When thinking about the amount of space that they're leasing to tenants, retail and industrial cover 95% of their real estate portfolio. As for Granite REIT, they own industrial warehouses and logistic properties in North America and Europe. Amongst its top 10 tenants are fairly large global companies with decent credit ratings and cash flow, such as Magna, Amazon, Walmart, and Samsung. The average duration of tenant leases is 7 years, and they have Amazon at 19 years. The last things these large companies want is to lose their employees and logistics in certain locations, as well as inventory held at their warehouses. So that's all for now. If you enjoyed this video, smash the like button and subscribe to my channel. In the comments below, let me know what you're investing in during these times.